Alright, guys, it's always a pleasure and it's always nice to have you on my channel. Okay, this is Famous Forex Academy, and you know me too well to know that whenever I drop a strategy, it's always a bomb. It's always one of the best strategies you will ever find online because I don't just come here to post what I'm not sure of. So, whenever I post a strategy, it's always a bomb. And if you check from my previous strategies, you'll see all the comments how people have been using it to make so much money for themselves. So I'm back with this amazing strategy today, and it's a spike catching strategy. It's one of the strategy you will use in catching spikes and make money for yourself. So if you are one of those traders that loves catching spikes and you love seeing strategies that will help you catch spikes, this is definitely the strategy for you. So guys, just sit back and watch the video, watch it carefully so you don't make mistakes when you're trying to trade it on your own chart. So guys, if you've not subscribed to this channel before, or this is the first time of you visiting this channel, I'll ask you to subscribe to the channel, share the video, like the video, and don't forget to turn on your notification so you can always get amazing stuffs like this whenever I post them online, because all I do is post amazing stuffs. Okay guys, so without wasting much of your time, I'm going to tell you how this strategy works. Okay, this strategy works perfectly fine on boom and crash 500. It can actually work on other pays, but I'm telling you the pay that I'm really sure that when you use it, is going to come out perfectly fine for you. So use it on boom 500 and on crash 500. It definitely works well here. So guys, this strategy we are just going to use only two indicators, which is the moving average and the relative strength index. So guys, this is how you use this strategy. First of all, before you start using this strategy, whether on crash or on boom, but this is boom 500, so that means we are actually going to start with boom. So that, let's assume you are trying to cash spikes with boom. So the first thing you want to do if you want to cash spike on boom, it's going to a higher time frame like the H1 time frame. That's the 1 hour time frame. So when you go to higher time frame like this, what are you looking for? You are looking to see the market being on uptrend, because you can't trade against the trend. If you're trying to catch spikes, you don't trade against the trend. If you're trying to catch spikes, you have to make sure that the market is on uptrend. That means the market is actually in your favor, because before the market is an uptrend market like this on boom, that means there has been series of spikes happening, pushing the price up. So that means that it's actually safe for you to buy at this kind of market, okay, and cash more spikes. So when you go to 1 hour time frame and you see the trend is an uptrend, then it's time for you to actually make that buy trade. So what you do is you go back to your 1 minute time frame, and you might say, how do I know that this is an uptrend? From the screen you can see that this is an uptrend market, and if you are familiar with your trend lines, you can actually see that this is an uptrend. From your trend line you draw here, you see this market is an uptrend market. Okay, so if you're not familiar with trend lines, I'll suggest you go online and read more about trend lines and how you can draw trend lines. Or if you actually don't understand it, you can chat me up or maybe enroll in my mentorship program, and I'll teach you all the basics, things you need to know in Forex. Okay guys, hit me up if you are trying to learn more about Forex. Are you a beginner, or you've been trading Forex but you don't really understand how this works? We have a mentorship program going up. You can always enroll on our mentorship program, and we will mold you into becoming one of the best traders in the world. Okay guys, so after you might have finished seeing that this is an uptrend market and it's safe for you to make that buy trade, all you do is you have to go back to your 1 minute time frame and look for an entry. So where will be your entry, guys? Where will be your entry, guys? Let's look for a perfect place that can really explain how this works. Okay, so guys, this is it, guys. So the first thing you want to do is wait, because in forex, like I always said, patience is very, very necessary. You have to be very patient when you're trading forex, because um being in a haste to make entries, it's always risky. It might end up blowing your accounts or making you lose so much money because you made a wrong entry. Most times, going into an going into a trade very early is always very bad, and going into a trade very late is always very bad. So you always have to have the right timing. You have to enter the trade at the perfect time, and when that happens, you see that you claim all the money and smile to the bank because you made the right choice. So now what you do is you wait for the moving average to touch the level 10 here. Okay, this is the level 10 here. So what you do is you wait for the moving average to hit the level 10. When once that happens, you see that the price it has once you see that the price is at level 10 like this. Okay, once the price is at level 10 here, I would advise that if the price comes down like this and hit the level 10, I'll advise that you don't just open the trade immediately and start buying. You just have to wait a bit for a price to go up like it did and came down again like this. And when that happens, that is when you open your positions, you start buying, and you have all these spikes going up like this. Guys, it's very easy and reliable. All you just need to do is just follow the instruction properly. Okay, follow the instruction properly. What you do what you need to do is, when once you find the price coming down to this level 10 here, okay, like I said, you don't just rush in like that. When you see the price coming to hit the level 10 here, you don't just rush and open the trade immediately. What you do is you wait a bit. The price might push up, okay, a little bit, then come down again. When it comes down a second time, that is the perfect time for you to open your positions, and when you do, you have all these spikes happening. I hope you understand what I'm trying to explain to you. I'm not saying that if you open the position at the first time that it might not work. Yes, there are times that the price will actually get to the level 10 here, and you have a spike and it continues like that without the market having a reversal. But just to be on the most safer side, okay, I'll suggest you wait. When once you have the price at this level 10 here, the first time you have the price coming down to this position here, okay, like you saw at that level, you saw that the price came down there was a little spike here, but it wasn't strong enough. The price had to reverse back and hit the level 10, and when it does the second time, you see the market pushed up got to this level. So at that point, it's very strong. If you have that kind of reversal and you enter the trade at that point, you might have a very long spike, okay, and would that will gain you a whole lot of money than just entering the trade at that first time. Okay, so that is how you catch spikes with this strategy. Let me show you another example. Okay, this is another example here. As you can see here, that the price came down to this level and hit the level 10, and there was a little spike here, but it came down again, and there it goes, and it continues like that. So guys, all you just need to do is just wait for the price, okay, to hit the level 10. And when that happens, I'm not saying you can enter at that time. You can enter at that time and probably be lucky enough to have lot of spec happening. But I always suggest that to be on a Musifa side and to have some good entries with good profits, I won't advise you to rush in immediately and start buying. So I advise you wait. Once you see the price, once you see the price coming down to this level and it hit the level 10 and you had the first little spike, I'll suggest you wait a bit for the price to have a little bit of a reversal, and when it comes back down to the level 10, then you now open your positions and you pick a whole lot of spikes like this. Okay, That is how you trade this strategy, and cash backs with it. So I know a lot of you will be asking like, okay, what will be the stop loss? What if we open these positions and the spike doesn't come and we end up blowing our account? So what I will advise you is, the moment you find this moving average at this level here, okay, at the level 10, okay, and you open your positions, once you open your positions and you don't find the spikes happening, and you see yourself being on a drawdown with a one candle, a two candle, three candle, four candles, and once you get to the fifth candles and you don't have a spike happening, I'll advise you close the trade, because the spike will not come anytime soon. So your stop loss will be the 5 candlesticks. But once you have a 5 candlesticks, you close the trade and wait for this and wait for it to probably get down to this level again. Okay, so one thing about this strategy is you can use it over and over again in a particular day. If you have all the time to trade, you can trade this 10 to 15, 20 times in a day. So far you have these conditions happening. When you see these conditions happening, you can always trade and make money. Most time, like I always tell my subscribers, no strategy is 100%, like 100% sure. Okay, you can't trade a strategy for 20 times and you expect it to work out 20 times. But some good strategies like this, if you trade it 20 times, I guarantee you that you will actually win 15 or more. Okay, so most times you might actually try the strategy, and maybe for the first time you just try the strategy and you waited for the moving average to get to the level 10 here, and when it does, you open your position and you didn't see any spike, and you just conclude that this strategy is fake or is not working. So what I would tell you is, don't just conclude. It might not actually work the first time, but if you try the next 10 times, it will work out for you and you make so much money for yourself. That's why I have to tell you that if you try to use this strategy, you open your positions and you start buying, and you don't see the trade, and you don't see the spike happening, what you just need to do is for you to avoid losing so much money. Okay, once you find yourself losing up to 5 candlesticks without a spike happening, what you do is you close the trade and wait for the conditions to actually happen again. Then you try again. If it still doesn't work in the like 3 times, then you know that this strategy is not working, that is actually fake. But I guarantee you that I don't post strategies that don't work. If you check my previous videos, you will see all my strategies are working perfectly fine. People are all commenting on how they've been doubling their account. Some even said they had $10 on their account, but they're now on $200 because of my strategy. So you can go to my previous strategies and you will see how they have been working, and people are actually smiling to the bank because of the strategy. So I don't come online and post strategies that I know that are not working. This strategy is working perfectly fine. All you just have to do is just follow the instruction properly and make sure you do everything right the way I'm doing it. So all you just have to do is you just have to wait for the moving average to get to the level 10 here. Okay, don't open your positions when this moving average doesn't touch the level 10. Okay, when one is have your moving average touching this level 10, you open your positions, like you buy. Okay, when you buy, if a spike doesn't happen, don't wait more than 5 minutes. That's 5 candlesticks. But once you have 5 candlesticks down and you don't have a spike, close the trade. But I'll guarantee you that if you follow this instruction properly, if you do what I'm asking you to do, you will actually cash spikes with this strategy. As you can see, it's been working, guys. It's been working. If you back test all this and you see that whenever the moving average touches the level 10 here, you see there's a spike. If you go back, you see the same thing happening. If you go back, you see the same thing happening. You see it touches the level 10 here and there's a spike. So guys, this strategy is not fake, it's working properly. All you just need to do is understand how it works. If you look at this very position here, you see that the you see that the moving average actually touches the level 10, but the spike didn't come immediately. Okay, spike didn't come immediately. You had just little bit of spike, it came down again, and goes up again before the spike now came out. So that's why I said, for me, I don't just rush in whenever the moving average touches the level 10. What I do is, if it touches the level 10, I have to wait a bit. As you can see, there was a little spike here, and the market came down again before it actually went up. So for me, all I do is I'll wait first. When it touches the level 10, I'll wait for it to give me that first spike. And if it goes and doesn't come back, I don't mind. But if it goes and come back again and hit the level 10, that is when I will now make my entry. And I guarantee that if you use that very pattern, it will actually work out perfectly fine for you. Don't rush in the first time. And once you see the moving average touches the level 10, don't rush in the first time. Wait for it to have a little bit of reversal, and when that happens, you open your positions and you close the trade with profit. And okay, you might ask, what will be your take profit? Where will you close the trade? Okay, like I showed you, where you can actually make your stop loss. Your stop loss will just be your 5 candlesticks. Once you have off the 5 candlesticks and you don't have a spike, close the trade. So your stop loss will be when you have your spike. If you have we have many types of spike. We have a little bit of spike that are not that big enough, and we have the little and the big mighty spikes that are actually big enough. So if you have your first spike, and one thing about trading is most people have their targets. There are people that target $20 in a day, that target $500 in a day, but that target $1,000 in a day. So it all depends on your target. So if the first spike will actually give you what you actually expected, if you're okay with the spike, with the amounts that comes out with the first spike, you can actually close. But if you're not okay, you can still hold the trade. And when it gives you more spike and you're sure that you're okay with the profit you are seeing and the profit you are making, you can actually close the trade. Okay, but for the stop loss, just make sure when it's up to 5 candlesticks and there's no spike, you close your trade. But I'll guarantee you guys that this strategy is amazing. It's working perfectly fine. It's working perfectly fine. Okay, so as you can see from here, you see that the price came down to this level. It touched the level 10 and there was a spike here, but the spike wasn't that long enough. But when the price came down again and touched the level 10, as you can see what happening. See what happened. There was a long spike. So that is what I'm saying, that if it touches the first time, that I don't rush in and open the position. I wait for it again to give me that reversal and touch the level 10 again. And when that happens, I will have a very long spike, as you can see from here. Okay, you saw what happened. The price came down here, touches the level 10, gives a spike here, then came down again, touches the level 10, and boom, there was a very long spike. Okay, the price pushed all the way up to this level, as you can see. So that is what I was trying to explain. You might feel bad that the price came down the first time and it gives a spike and you didn't take it. Yes, sometimes we miss the entry, but I'll always like to take the best entries, okay, that will actually fetch me more money than what the other entry would that might have fetched me. So that was what I was talking about. But you can always try. Like if it touches the first time, I'm not saying there won't be a spike. There will be a spike. You can actually enter from there and still make a little bit of money. But the best will be when you wait for it to come down again and gives you a better spike. So guys, this is how this strategy works. It works perfectly fine. It works mainly on boom and crash 500. Don't go and use it on other pays and lose money and complain. Make sure you use boom 500, because I know a lot of people that when I show them strategies on boom 500 or 1000, they now use it on crash 300, which is very volatile, and when they lose money they now come to blame someone. I never said you should use it on 300. I said use it on 500, because these examples I'm showing you on boom 500, and it works too on crash 500, just on the reverse side. If you're on crash, you have to wait for the moving average to hit the level 90 before you make your sell trade. And if you're on boom, you have to wait for it to hit the level 10, then you make your buy trade. This is how this strategy works, guys. It's amazing. Try it on your trades. Like I always advise my subscribers, you can try it on your demo account first, and once you are more comfortable with it on your demo, you move to your real account and you use it and make money for yourself. So guys, thanks for watching this video. Don't forget to drop your comments when one you do this strategy and it works for you. Come back here, drop comments and tell people how it actually went. Okay guys, so before we end the video, let me share the settings for this strategy so you can insert them on your own chart before you start using the strategy. So okay, before you insert the settings, for those that don't really know or are not familiar on how to insert indicators on your chart, you go to the F symbol. Okay, you have on your screen. When you click on your F symbol, you have the main chart and the indicator window one. So first of all, what you do is you add the relative strength index. Okay, you click on relative strength index, and the parameters for the is 500, period is 500, apply to close, style it's 2 pixel, and use whites. Okay, then the levels here are the level 10 and level 90, and after that you click on done. Okay, so the next indicator you'll be adding will be the moving average. Okay, and we have two moving averages here. So the first moving average here will be the period 4. Okay, shift 0, method is exponential, apply to weighted close HLCC/4. The style is 1 pixel. You can use any color of your choice, but always make sure you're using a more visible color, a color that will stand out from the chart that you can actually see it. Okay, and after that you click on done. So the last indicator we'll be adding here will be our second moving average, which has the period of 5, shift 0, method exponential, apply to weighted close HLCC/4, style is 1 pixel, and use any color of your choice. Then you click on done. So that's all for the indicators for this strategy. Okay guys, that's all for the strategy. So guys, that's it's all. Thanks guys for watching the video. Okay, see you some other time. Bye.